How you doing? Week 6 with Francisco, consultant expert. Thank you for listening in. Remember that we have 2 offices here at 780 Midlothian Turnpike, Richmond, Virginia, 23235. Phone number is 804-269-7689. And also another office at 6115 Staples Mills Road. Thank you for listening in. And this week we're going to talk about Schedule C. Okay, and what is Schedule C? You see profit or loss from business. Schedule C is a form that people fill out that if you receive a 1099 and you're paid as a subcontractor, you're going to fill out this form when you do your taxes and when you come to do your individual taxes. And then also those that have their own business, sole proprietor under their EIN or tax ID, under social security number as well. Could be a small business that you just started, you got a little business license and you want to report that income. And also those that have a single member LLC. Now single member LLC does have an option to send in 8832, which is any classification change, to be treated as a corporation. But 9 times out of 10 when you come to a place like to prepare your taxes, sometimes the preparer is an educator, have a lot of education or many years with businesses. So what they do is the easiest thing, Schedule C, fill it out, right? And so basically you're treated as a sole proprietor even though you have an LLC. So there's advantages and disadvantages of this. The disadvantage of if something happens, sometimes it can affect you personally. So that's why sometimes people elect to have their LLC treated as a corporation for tax purposes. Now the advantage of that is once you send 8832, the IRS will treat your company as a corporation, but you won't change your EIN, you won't change your business name, anything of this nature. So the thing is you can keep operating without changing anything, just in respect to the government. Expenses that you can put when you have a schedule, when you fill out Schedule C. So let's say you come to your taxes, you have your information, you got your 1099, you're doing it. Why the preparer is doing your tax form, you're putting your information in your 1040, they're also filling out Schedule C. So they're going to ask you what kind of car do you have. So you have to put when you started using that car. Legally you can claim mileage. So you have to separate your commuting mileage with your business mileage. You can claim insurance. You can claim advertising expenses such as buying cards, such as any signs you may do, such as any promotion that you may do, videos that you may do, contract labor, employees, food. There's limits on food. Sometimes 50% is generally the average. There's other ways to form it out. Tools, safety expenses, let's say safety supplies, all these expenses of which you're going to see on here, repairs, rents. This form is going to be a link so you can click on it and see, and you can verify these expenses and see all of them that you're eligible for on the IRS, www.irs.gov. So it's important to know because all these things help you, because as we talked about last week, you always have to report the gross and then you put the expenses and then the net income is what you're going to be taxed on. So very important to know what you can and can't claim and figure out how it's going to help you as well. And very important that I always recommend if you see that you start climbing in income, especially over $250,000, sometimes it's good to convert to a corporation, because as you increase in income that's coming into your company, and I understand saying that, I'm talking about gross. 250 comes in, sometimes you don't have money, like, oh my gosh, I didn't make all that money, I had to pay people. But you're always classified, what gross comes in, you're classified after 250,000 with certain corporations. You have to fill out a balance sheet. Under that, you don't. So I always recommend once you see your company growing, that's when it's good to look at incorporating, or if you have an existing LLC, to convert it by filling out 8832 to a corporation for income tax purposes. Again, I want to thank you for listening in. Remember, you can always come to one of our offices to prepare your taxes. We're here. We don't charge for any consultation, anything like that. Again, one last time. Schedule C. Who fills this out? Sole proprietors, people that have a 1099 and claim their taxes as a business owner, contractors, people that have small convenience stores under their tax ID or social security number, or even if you got EIN under your social security number but didn't incorporate or didn't make an LLC, and certain LLC sole members. Okay, next we're going to talk about corporations. We're just going to explain the difference so that when you come in you know what you're doing, because sometimes people confuse it, like, oh, am I doing my personal, my business? What happens is you come out and you fill your personal, and while you're doing that, they're doing the Schedule C, and the information, which is going to be down here in box net income, total expenses, tentative profit, line 29. Line 29 is going to be converted to the first page of your 1040, and you're going to be taxed on that. So basically, it comes to be merged. So it's very important. Sometimes people are, oh, you did both in one. People are a little confused with that. So it's very important to ask. So remember, you can come in for your consultation, ask us any questions. We're here to help at Latino Tax and Business Service. Thank you for listening in, and have a great day.